Welcome to day 7 of the Wall Street Crossover Show. It gives me great pleasure to introduce Mr. Darren Sinden, market commentator at Admiral Markets and the sponsor of this segment. How the devil are you, young Darren?
Very well, thank you, Nick.
If you're watching for the first time, basically we do a quick recap of what's happening in Europe and more importantly what's about to happen in the US of A. Let's kick off with our first slide, data released over the European session. What's been the key components this morning?
Well, I thought we'd take a look at something that came out prior to Europe, first of all, and that was the Japanese retail sales figures, and they make quite frightening reading. That headline number, they're down 9.7% year on year, is correct. People have asked me.
I thought that was a typo.
No, it is correct, but bear in mind that they introduced a sales tax in April 2014 and everybody ran to the shops to buy whatever they could before that sales tax was imposed. But perhaps more interestingly, the year-on-year number, the month-on-month number, so March over February, down 1.9% versus a forecast of a growth of 0.6%. So even if we discount the sharp fall year over year, the trend is not good, and the fact that we've got a reasonable miss versus a half decent gain that was forecast is a further worry for the Abe government and the Bank of Japan. And speaking of worries, French unemployment, another number that was out earlier today, yes, up by 0.4%, a new record high. Unemployment rate in France of 10.4%. Oddly enough, consumer confidence was up at the same time, so something of a disconnect there, which I can't quite square. But I think I'd be more concerned about the unemployment number than I would be positive about the consumer confidence. And then closer to home, also disappointing, Q1 GDP here in the UK came in at just 0.3% gain versus an expectation of 0.6% quarter on quarter.
But that was well flagged, wasn't it, in the weekend press? They were expecting weaker growth.
Yes, and also that we had that CBI Industrial Trends Survey earlier in the week, which we commented on, that suggested that things weren't going as well as they could be. Of course, these numbers have historically been subject to significant revision, so we won't read too much into it. But I suspect that the government would probably, or the outgoing government would probably prefer to see a positive number a week before the election. But anyway, make of it what you will. Cable took it in its stride and bounced nicely off of a sharp dip on the headlines. So we'll see what goes
Understood. Okay, so let's move on to the next slide, the FTSE 100 movers and shakers.
Okay, well, just picked out 3 from the list of movers today. Firstly, Centrica, utility, but also has a foot in the gas exploration business as well. Chairman commented that they are prepared for any takeover approach. That's not to
Does that mean a poison pill in place, or is he asking people to come to him, do you think?
Well, it's hard to judge, really. I think the market's taken the view that there's, that he perhaps there's a little bit of both to that story, that maybe they've had a tentative approach, although they say that they haven't, and the stock's
quite a strange thing to say, Darren.
It is. I mean, maybe he's been taken out of context. I don't know, but I flag it. The stock's up 1.6%, and that's after they had what most people would say were slightly disappointing numbers earlier in the week as well.
Understood.
Then BP, we talked about what an important week it is for the oil industry yesterday, and BP's kicked off oil earnings today. Solid numbers, earnings and revenue beats, and the stock called up 1.69%. I'm surprised that they haven't done a little bit better than that in the market, and maybe that's a sort of a reflection.
The FTSE's lower this morning, isn't it?
Maybe it's a reflection of the wider sentiment rather than anything
stock specific.
Yes, to BP. And then Shire Pharma, or as was Shire PLC, as we must call them now, down 2.33%. Profit taking really ahead of Thursday's numbers from them. Of course, they were a big target themselves until recently, when their transatlantic deal fell apart. We'll see what the management's got to say about that deal, whether it cost them much in terms of defending it, and find out a bit more about their progress with those numbers on Thursday.
Right. Okay. So let's take a look now at the M&A rumours and movers.
Okay, we're coming back to a variation on a theme, because we talked about Time Warner in one of the earlier shows, and they're back in the news again. And this time, the company's admitted that they're open to talks with another cable company, Charter, CHTR in the US. Now, the interesting thing here is that Time Warner fought off a hostile bid from Charter a little over a year ago. More recently, Time Warner abandoned their potential merger with Comcast, basically on competition grounds. Interesting to note, though, that Charter's share price is up 40% since they bid for TWC. The previous Charter bid valued Time Warner around $132.50 a share. That compares with the current price of $156. Comcast was offering around $158.80. So if Charter are going to come back, they've got to sweeten the deal somewhat. What is interesting as well, though, is that a combination of Time Warner and Charter, which would be the number 2 and number 4 cable companies in the States, would have less of a competition impact than the Comcast type would have done, and that Time Warner jumped 5.9% on rumours of contact between themselves and Charter on Friday. And I think the story's been revved up again today, and I suspect we could see another move in Time Warner shares during today's session.
Understood. Okay, let's talk now about the US data points to keep an eye on.
Okay, well, you might think that we should probably have had some comment on Apple in here, but we're not going to mention those. They're up 2.5%. We're not going to add too much value. Everyone's talking about that.
I'm sure there's enough research out there.
So let's look at some other stuff. So the first thing is the Case-Shiller House Price Index for February. It's the seasonally adjusted number that we want to have a look at. There are several numbers in this report, but we're looking for a modest gain of 0.7% versus a 0.9% gain in house prices last month. Consumer confidence for April, again, we're looking for a positive read here, a forecast of 103 versus a 101.3 read in March. And then another one of these regional manufacturing index surveys, this time from the Richmond, Virginia Fed, and the forecast here is for still for a fall of -2, but versus a much bigger fall in the prior month of -8. So as with the Dallas Fed number the other day, still slowing, but slowing more slowly, if I can put it like that. Yep. And then the stat that's
your second typo, 400 companies.
Yes, 400 US companies.
And that's correct.
Today. Yeah, it's the busiest day of Q1 earnings so far. So there's an absolute tidal wave of earnings coming out from all sorts of companies. So there's going to be plenty of interesting news headlines to look at tomorrow.
Understood. Okay, so let's wrap up with the US pre-market movers and a few chart points.
Okay, well, one that took my eye was Barrick Gold. They reported last night and they missed Q1 earnings. They're down 1.56% prior to the market. And then another company that stood out, one that perhaps people aren't so familiar with, but a company called Container Store, who actually provide domestic and commercial storage solutions, literally plastic boxes to put your bits and pieces in. They've been really hurt by strong US dollar. Yeah, big earnings miss, and particularly the dollar strength has bitten into their Nordic sales, and they're called down by 25% prior to the open today. And then in terms of looking at levels in our indices, slightly widened here. The S&P 2103 on the downside versus 2125 to the upside. The Dow 17,975 is your downside level, and 18,110 the level to watch on the upside. A bit more upbeat in the currencies. Euro dollar, we're watching 108.46 on the downside, and a new big figure in the upside level here, 110.05. Aussie dollar, US dollar, we're looking at 78.40 to the downside and 79.40 on the upside, whilst in dollar yen the range is 118.50 on the downside, 119.40 on the upside, and in cable 151.70 is the downside, which was the low immediately after the GDP numbers, or 152.90 to the upside.
Okay, quite interesting. The euro US dollars the levels are ticking up, aren't they?
And so is cable, surprisingly ahead of the election. But maybe that says more about dollar weakness than it does sterling strength, but we shall see.
Good point. Okay, Darren Sinden, market commentator for Admiral Markets. Thank you for that. That wraps up the Wall Street crossover show. If you want us to cover anything going forward, we're always open for...
Yeah, please let us know if you've got any suggestions or feedback. We'd love to hear it.
Have a good day. Thank you.